Hello and welcome to the weekly market metrics. We are in week 45 of the year, just 7 weeks left in 2025. I have already started looking for a new gym near my place. My goal is to distribute my wealth among different gyms over the years in my area. Anyways, let me get back to business and it's time for our weekly dose of market metrics. Last week was a short one with just 4 trading days and I expected the markets would bounce back. But note to self, I should not expect because after all, expectation is the cause of all sorts of problems. Talking about Nifty, what I thought to be a pause turned into pain this week, reminding me of that meme from Masan, yes, this one. In other news, this week continued to see layoffs across US tech giants affecting people in India as well. Zoran Mamdani's win was all over the media, though that shouldn't matter to us in any ways. I also read that ahead of Warren Buffett's anticipated exit, Berkshire Hathaway's cash swelled to a record $381.7 billion. That's something. To put that in perspective, that cash pile is enough to buy 3 to 4 banks from Nifty 50 and you would still be left with some cash. On a positive note, India's women's cricket team clinched their maiden ICC Women's World Cup title, defeating Australia in the final, which was historic to say the least. Anyways, let's get started with the charts and indexes. As always, Nifty first. On the weekly time frame, after breaking below the key support zone of 25,700 to 25,670, Nifty has now shifted its short-term structure. On Friday, the index tested the 25,330 level, which is also an important support area, and we did see some buying emerge from there. So for the week, Nifty ended 0.89% lower, slipping around 230 points and closed at 25,492. On the charts, the previous support zone of 25,700 and 25,670 now turn into resistance. On the downside, the immediate support lies at 25,300 and if that level breaks, the next major weekly support is seen near 24,650. So currently, the price action remains slightly negative to sideways with resistance overhead and support levels being tested. In my view, the trend remains weak for now. My bias will turn positive only if Nifty is able to close above this week's high near 25,800 on a weekly closing basis. Let's see how the index behaves in the coming sessions. On the daily chart, Nifty is again hovering around the crucial support level of 25,450. Out of the 4 trading sessions this week, Nifty has closed 3 days in red with only Monday closing positive. Going forward, the immediate support to watch is 25,450 and then around 25,000, while the resistance is at 25,700 and then at 26,100. So for now, the index remains range bound between these levels. If we look at the higher high, higher low structure on the chart, it still is intact. Now the key point to watch is whether the current move forms a new higher low or not. This week, Nifty made a high of 25,803 on Monday, then slipped about 485 points to a low of 25,318 and eventually closed near 25,500. Moving to the hourly time frame, Nifty broke below its 50 EMA last Friday and has remained below it throughout this week. However, on Friday, we did see a decent recovery from the lows of 25,318 with the index closing around 25,492. So to conclude, the bias on the 1-hour chart remains negative for now. Let's see whether the short positions follow through or if the market once again traps shorts as it often does. Talking about the overnight versus intraday moves in Nifty this week, similar to week 44, both segments were negative this week as well. Nifty opened with a positive gap only on Monday. For the remaining 3 sessions, it opened lower with negative gaps. On an intraday basis, Nifty slipped around minus 0.41% this week. Looking at 2025 year-to-date, Nifty has gained roughly 8.66% from overnight moves, but only 0.52% from intraday moves. Let's move to BANKNIFTY now. On the weekly time frame, BANKNIFTY is still trying to hold above the breakout zone of 57,600 and 57,650. However, the index hasn't made any meaningful move in the last 3 weeks, gaining only about 163 points or roughly 0.28% over that period. For this week specifically, Bank Nifty added around 100 points or 0.17% and closed at 57,877. During the week, it made a low of 57,157, but on Friday, we saw a decent recovery and the index made a move of around 844 points higher from the low, roughly a 1.5% bounce. Support and resistance zones remain unchanged from last week, support at 57,600 and resistance at 58,600. Looking at Bank Nifty on a daily time frame, the key levels are still the same as the weekly chart. We have a resistance near 58,600 and support near the 57,600, 57,400 zone. This week, Bank Nifty formed 2 green candles and 2 red candles. The green candles came on the first and the last trading day with the 2 red candles in between. Friday saw good buying strength with the index moving 0.56% higher. The higher high and higher low structure is also intact on Bank Nifty, just like we observed in Nifty. Overall, Bank Nifty continues to look stronger than Nifty across multiple timeframes. It's possible that non-financial stocks within Nifty are dragging the index down while banking stocks are holding relatively firm. Looking at Bank Nifty on an hourly time frame, it is currently chopping around the 50 EMA with no clear directional move. So while the weekly and daily bias remains bullish, the 1 hour time frame is still indecisive at the moment. Now over to mid-cap Nifty. On a weekly time frame, the story remains similar to last week with the index still unable to clear the resistance around 13,550. For the week, it slipped about 21 points or 0.16% and closed at 13,447, making it another flat week after the strong 2% move previously. Unless the index decisively closes above the 13,550, 13,620 zone on a weekly time frame, the bias stays sideways to mildly bullish. Moving on to the daily time frame, just like Bank Nifty, the 2 red candles of Tuesday and Thursday were sandwiched between the green candles of Monday and Friday, with Friday showing some signs of recovery. Whether the Friday's up move carries forward or fades out, we will know in the coming week. Resistance remains at 13,550 to 13,620 zone while support is near 13,100. Moving to SENSEX on a weekly time frame, we had 2 back-to-back red weekly candles. The index lost 722 points or about 0.86% to close at 83,216 compared to last week's close. Sensex tested and briefly breached the support around 83,150 but managed to close back above it. For now, resistance remains at 84,100 and 85,300 while support is seen at 83,150 and 80,400. Moving on to Sensex Daily, a similar story can be seen there as well. With 3 red candles, the support and resistance zone remain largely the same as on the weekly chart. The only silver lining was Friday's candle, which showed some buying interest and managed to close above the important support level of 83,150. The bias here remains mildly bearish to sideways for now. Talking about the rate of change this week, in the first week of November, we saw red across most indices except for Bank Nifty, which managed to close positively at 0.17% higher, while Nifty and Sensex both slipped close to 1%. On a year-to-date basis, Bank Nifty remains the strongest performer with 13.8% gains, followed by Nifty at 7.81% and Sensex at 6.5%. In terms of proximity to their all-time highs, Bank Nifty is the closest, just 0.87% away, followed by Mid-Cap Nifty, which is 1% away, while Nifty and Sensex are roughly 3% below their respective all-time highs. Talking about the directional bias, this week Nifty and Sensex have seen their short-term bias turn negative. Both the indices dropped below the 21 EMA on a daily time frame. However, the medium-term bias based on price relative to the 50-period EMA still remains positive. On the other hand, Bank Nifty and Mid-Cap Nifty continue to hold their positive bias both on short-term and medium-term timeframes. Are these early signs of weakness ahead or just a bout of short-term turbulence? I'm hoping it's the latter. Let's see how things unfold in the coming week. Looking at the top performing sectors this week, PSU banks have remained in the top 5 sectors for 3 consecutive weeks now, securing the top spot both this week and the previous one. I think there is some news around PSU banks that the government is preparing a new plan to merge certain public sector banks and privatize smaller lenders. Financial services, banking, pharma, and auto were the 4 new entrants among the top performing sectors this week, which also explains Bank Nifty's relative strength compared to other indexes. Talking about the range, straddle prices and expiries, Nifty's 5-day range continues to hover around 200 points, which is similar to last week and also matches the 10-day average range. Interestingly, all major indices had their highest range day on Friday, just like last week. Now the question is there really something about Fridays that makes them the highest range days? Or is it just my recency bias kicking in? Do let me know what you think in the comments below. The Nifty 2DT straddle premium currently is at around 175 rupees, which is just 0.68% of the spot. That's quite low considering the index has been showing a daily average range of about 200 points. Now talking about the expiries, last week Nifty expiry was tricky while SENSEX expiry was relatively smooth, and this week it was the other way around. Nifty weekly expiry on Tuesday saw a downtrending day with a 209 point range, and there were no major pullbacks or spikes. It turned out to be a fairly easy session for directional sellers and even for option buyers. On the other hand, the SENSEX expiry was far more volatile with a 609 point range, while Straddle lost most of its premium within the first couple of hours, followed by the unusual post 2 p.m. swings. Selling straddles or strangles after 2 p.m. used to be quite rewarding in the past, but it's getting increasingly tougher now. I'm thinking maybe it's time to experiment with some sort of a long gamma trade post 2 p.m. instead, just a thought. Talking about India VIX this week, it continued to inch higher, rising 3.33% this week to close at 12.56. It has been steadily moving up since the start of October, climbing from 10.06 to 12.56, and that's nearly a 25% increase. Whether this is just a mean reversion thing or a sign that something else is brewing, I don't have a clear answer yet. Moving on to commodities futures for the week. After a quiet week across most commodities, natural gas stood out with a strong 5% gain, reclaiming some of the lost ground in the recent months. Could this be the seasonality effect starting to play out? Maybe. Gold and silver were largely range-bound this week, slipping 0.31% and gaining 0.12% respectively after their sharp rallies in the recent quarters. Both remain solid performers on the year-to-date basis, with gold up nearly 50% and silver up nearly 60%, continuing to outperform most other asset classes. Copper eased at 0.87%, showing mild consolidation after its recent climb, while crude oil stayed under pressure, losing 1.59% for the week and remaining well below its highs. Overall, precious metals continues to hold strength, base metals are steady, and energy remains mixed, with natural gas leading the commodity space this week. In summary, the market took a breather this week. Nifty broke below the 25,700, 25,670 support zone, tested 25,330 and closed 1% lower at 25,492. The structure looks slightly negative to sideways unless it reclaims 25,800 on a weekly close basis. Bank Nifty held its ground better, ending 0.17% higher at 57,877, still above its breakout zone. SENSEX slipped 0.86% to 83,216 but managed to close above the key support level at 83,150. Sector-wise, PSU banks stayed on top for the third straight week, joined by financials, pharma, and auto, which explains Bank Nifty's relative strength. India VIX climbed up to 12.56, up 3.3% for the week. That's nearly 25% higher since October. Volatility is quietly creeping in, that's what I see. In commodities, gold and silver stayed flat while natural gas jumped 5%, likely on seasonal tailwinds. Overall, a sideways to slightly negative week for equities, but no sign of panic yet. Now, talking about what to expect in the coming week, we have the Bihar Legislative Assembly election results coming up on Friday, 14th November. Will that have any impact on the stock market? I have my doubts, but many do believe that the state elections can influence sentiments. So let's see how that plays out. Apart from that, on Wednesday, 12th November, we have the inflation rate year on year for October, but I don't see that as a major market moving event. Also, it's a full 5 trading day week ahead. The thing to watch out for next week is if Nifty can hold the 25,300 level and bounce back from there. Until then, stay curious, stay steady, and have a great weekend. That's pretty much for this week. And yes, do not forget to subscribe to this channel. See you soon.